Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you guys are looking for undervalued investment opportunities, click subscribe, or just financial education, or you want to debate something, put it in the comments section. I'd love to hear your opinion. So today, we're going to go over oil and natural gas. This is technical analysis. We're going to look at some of the charts, and I'll give you my opinion. Again, this is not financial advice or anything. It's just financial education. So let's jump on in here, talk about the technical analysis of oil and natural gas. So oil price, it broke to the upside of this little pattern here, this little consolidation pattern, and we're moving higher. It looks good. Not much to really say. Little up days in comparison to this big volatility back here, but it's looking good. Here's gold to oil ratio. It's at 26.32 is the latest print. We've got a trend line coming up here, and I think we're going to probably try heading down there and hitting this trend line at some point. We've got natural gas. I chopped the tops off of them, these little spikes, and I went to where the majority of the buyers and sellers are at. So there's a bunch down here. There's a couple here. There's one here, here. We've hit this line a couple times, and it is breaking to the upside here. We got a little bit of resistance. Maybe we could break to the upside and leave this little area for natural gas. But natural gas looks pretty strong. On a natural gas to oil ratio, the energy content is 1:6. So you wouldn't necessarily price it. Oil is going to get a little bit of a premium because it's easier to transport and people want oil more than natural gas. And same with the scarcity in the earth. I think oil is a little bit more scarce than natural gas, but nonetheless, we're at a cheap 21 to 1 ratio for 21 MCF natural gas to 1 barrel of oil. So that in history, anything above this kind of 20-ish area is pretty cheap. So above 20 is cheap. I'd say below 10 is pretty expensive. So we're in a pretty cheap area. And this is the oil to natural gas zoomed in, just to kind of give you a look. We've got a bearish engulfing right here, which means we started a new kind of downtrend, potentially. So natural gas could outperform oil. Now, getting into some of these companies, here's Southwestern Energy. We do have kind of a bearish little move here, but we're in an uptrend. It still looks really strong. I'm not really doing anything. I'm just holding on. Same with Ontario Resources, looks pretty good. I mean, it's a left to right move, and the sellers couldn't do anything here. They tried right here. Buyers stepped in and just drove it higher. So buyers are in control. Crew Energy, look at that move. We broke out of this area right in here. You can see this resistance. Hit it, hit it, hit it, hit it. You saw the sellers and buyers equal each other right here. And then the buyers took off and said, nope, we are going way higher, and we're in this impulse move higher. I'm not doing anything. I'm just holding on to it. Athabasca Oil Corp, again, look at the volume down here. Lots of volume. This thing's going way higher. Just hold on to it. Hold on to this bull and don't do anything. Birchcliff Energy, another one I own. Just moving higher and higher and higher. Looking great. Advantage Oil and Gas, another company I own. It's moving higher. What am I going to do? I'm going to do nothing. Just going to hold on. Another company, SM Energy, that I hold. Now, this could potentially pull back a little bit. I mean, in the future, after oil goes, keep in mind that some of these companies do have hedges in place. And what is a hedge? A hedge means that they hedged a portion of their production, and when prices were falling, a lot of these companies hedged their production with derivatives where they could sell their oil between a certain price. Some of them are between $30 and $60. And when the price goes above $60, they are actually losing money on those contracts because they could sell the oil for greater than what the contract is allowing them to sell. But they had to do it in order to protect the company from going bankrupt on the move down. So there's always risk in doing hedges. SM Energy does have a lot of its oil hedged. along with Centennial Development, along with a lot of these oil companies, and Callon Petroleum, almost all of them had hedges in place, all the oil companies, because they got afraid and they had to do it. But they're going to become much more profitable next year when a lot of these hedges roll off, either in the middle of 2021 or at the beginning of 2022. So SM Energy, Centennial Development Resource, looks like it's breaking out of the cup, and this is the handle portion that it broke out of, so this is looking pretty good. And Callon Petroleum, same move here. It's all looking good. Tellurian, again, we've got this pullback. I'm not doing anything with it. I'm just holding on. We've got Gran Tierra. This one's actually looking pretty good. And the reason it looks pretty good is we pulled on back. We've got a higher low, higher low, higher low. The sellers are muted. There's no sellers here. I think this is a low risk area to look at GTE in here. If you like GTE, you don't have to do this. I'm just right here. I don't see too many sellers smacking this thing down. I think the buyer's going to step in here and probably drive it higher. Reconnaissance Energy Africa, I have a decent stake in it. This is an exploration oil company. I think they found something pretty big. They've been moving higher, and they continue to move higher. And it's made me quite a bit of money. So this is a good one to watch. Would I enter it up here? Maybe. I mean, it's up to you. But they are finding things. They had 2 successful drilled wells that were producing oil, and then they're going to do a third and see how big this thing is. Tetra Technologies, it's got a nice move higher here, and we're just continuing to move higher and higher. So that one looks like in a strong uptrend. Same with Transocean. This is a deep sea driller. This is an energy service company. Big move higher. We're kind of moving sideways. We do have some selling pressure in here. So it doesn't look as good as some of the natural gas and oil companies in Canada. And then DXP Enterprises, I own a little bit in this as well from back here, and I'm just holding on. It's just kind of the Granger of oil. Doesn't look too bad. And then we've got Suncor Energy. I was looking at my holdings because I forget in some accounts to look at it. I do own Suncor. I bought it at like somewhere back here, October, November. No, yeah, maybe in here I bought it. And then it's moving on up, looking very strong. I also own Range Resources. I found that in one of the portfolios. I've been holding on to Range Resources the entire time. I don't talk too much about it. I own CNX Resources as well. Those are 2 natural gas companies that I own that I'm just holding on to. They're a little bit bigger, not huge, but they're a little bigger. So that's what I own. That's basically all the companies that I own in a lot of my portfolios. I wanted to chart a lot of them out. But oil looks pretty good. Some of them are blast and higher. Other ones are kind of tracking sideways to slight higher. I'm not, honestly, guys, I'm not doing much of anything. I think oil is an excellent opportunity for about a 5 for this entire bull market. I don't think they can displace oil as quickly as many people think. I think the investments have pulled back, and I think they're creating a condition where oil can do a moonshot. We'll see. When demand exceeds supply and the investments haven't been going into oil, I want to see how high this thing gets. I don't have any projections. Here's my projection. I think it will get to $200 at a minimum from a weakening dollar. Above and beyond that, I don't know how much. It could go quite high. It could do a spike. We'll see. If you guys like this content, give me a thumbs up. Thank you for listening. This is Finding Value.